everyone. Thank you for joining us once again here at Sea Freedom Brew for our weekly briefing. I am Jamie Sumner, Chief Analyst, and for this week's briefing, we just want to go over some of the releases from last week. Also, a release that came out this morning. So first we want to look at the ISM Non-manufacturing and manufacturing indexes here. And this is something that we like to follow, gives us a good indication as far as the economy and how it is humming along. So this is the August index, and the one thing we can see is that both the non-manufacturing and the manufacturing increased month over month. So we're up 1.4 percent points on the non-manufacturing and then up 2.5 on the manufacturing. So overall positive increases in the two. When we look at the business activity and production, both up for the manufacturing as well as the non-manufacturing, another positive. New orders for the non-manufacturing up 2 percentage points. That's a positive. On the manufacturing, though, we're down just 1/10 of a percentage point. So a little bit of pullback, but nothing too drastic. The employment numbers here up 2.6 and for the non-manufacturing and 4.7 for the manufacturing. So that is a positive. Overall, when we look at these indexes and the individual components, it's just pointing to a positive third quarter in here. And you can see the full report of this at the link down below, which is included in the downloaded version of this PowerPoint presentation. Overall, the economy here suggesting the takers of the survey growing faster, and that's a positive, and that's for both the overall and the non-manufacturing sector in here. So this is pointing to a fairly positive third quarter numbers. When we look at the release that came out this morning of the Small Business Optimism Index, we can see that we had a slight bit of an uptick in here. When we look at August compared to July, we're up at that 105.3, so we have a little bit of pickup. We had a huge pickup right after the election, kind of pushed it up. A little bit of a fall down during the beginning of this year, but we've steadily seen this number picking up in here. When we look at the individual components of here, we have a pretty good segment and some good information. Plans to increase employment came down just by 1 percentage point, so not a too terribly large move, but it was negative. However, look at this, plans to make capital outlays, 32% up 4 percentage points. That is a positive, particularly for the banking industry with the loans in here. We want to see if we can capture this in that loan growth when we look at those numbers when they come out for the third quarter. Inventories, plan to increase inventories, actually came down. That would be a slight negative for GDP. The expect the economy to improve. This is neutral in here when we look at August to July. Expect real sales to be higher, 27 up 5 percentage points. So they're very optimistic on the next couple of months' earnings or sales in here. Current inventory down. The jobs opening also down by 4 percentage points when we're looking at July moving to August. So that is a takeaway, that's a negative. But the overall earnings trends, negative 11, and this is coming down 1 percentage point in here. So overall, a little lower, but we're still seeing those sales kind of ramp along in here. This could be an indication that those margins are being compressed, which is happening at the banking environments as well. With that narrowing of the treasury curve, we see the potential for continued narrowing of banks' net interest margin. Well, that's what we have for you today. There's a couple of extra numbers coming out later this week. We have CPI, we have retail sales, and as well as the inventories numbers coming out. So it'll be interesting to see how this rolls out. We'll report on that next week. But overall, for right now, it seems like the third quarter is producing some pretty strong numbers. That's what we have for you this week. We hope everyone has a great week. We'll see you next week.